Bitcoin's post-election march toward $100,000 stalling here. The cryptocurrency now ticking lower here, just above the 95,500 mark, but still moving to the downside this morning. With President-elect Donald Trump tapping Scott Bessent as his pick for Treasury Secretary, what can investors expect for the future of regulation in the crypto space? Joining us to discuss, we've got Don Friedman. He is the president of the Digital Assets Council of Financial Professionals. Don, it's great to speak with you. So talk to me about this move we're seeing to the downside here. What do you make of that move? And do you think it'll correct itself to give the crypto enthusiasts out there that $100,000 level by the time they're sitting down for Thanksgiving dinner?
I really don't think it's anything to worry about. Think about several years ago, we had this discussion about 20,000. It went lower. Then we had this discussion earlier this year at 73,000. And now we're having this discussion again at 100,000. So we look at this as a phenomenal opportunity to dollar cost average your way in. As you can imagine, people have FOMO, fear of missing out, and that makes people nervous. When you dollar cost average, you're robotic, it's mechanic, you're buying it on a regular basis, and that way you're in a good spot for the long term.
Well, Don, then how should investors, I guess, when you talk about getting in a good spot for the long term, what does that long-term potential look like in your view?
Again, we try and stay away from predictions. Most times people are wrong on that. Again, when you dollar cost average, that's the way to go. The discussions that we're having more with advisors is more about, like I said, dollar cost averaging, rebalancing if it goes up. And then in a year like 2022, if it does go down, you have the opportunity to take advantage of the tax loss harvest. So don't focus on predictions, focus on dollar cost averaging and getting in on a regular basis.
Getting in on a regular basis sort of reminds me of what we're seeing from Michael Saylor over at MicroStrategy, continuing to get in on a regular basis. He says he likes to buy the highs, but is that a strategy that retail investors who don't necessarily have the balance sheet he has should copy?
Well, obviously, they're buying at a much smaller amount. But the interesting thing you bring about Michael Saylor is he just bought it around 88, 89,000. So as an average investor, think about, like, do we think we're smarter than Michael Saylor? I would say not. So if he's buying at 88, 89, it's probably okay, again, for a retail investor as long as you dollar cost average.